Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 5th, and again, we got quite a bit of economic news releases scheduled for today, and we're going to jump right on into it, as today and tomorrow are the big days this week. So we'll start off here with the ADP employment for December. We had about in October, they showed 204,000 new jobs, and for December it jumped up to 325,000. So looking pretty good there on the job side. We do need obviously jobs to get this economy moving. Jobless claims for last week. Previous week was at 387. We figured it would drop a little bit lower down to 373, and pretty much came in at expectation. So the forecasts were pretty close there. So again, good news. Jobless claims are decreasing, and hopefully, continue seeing employment and numbers increase. And tomorrow we'll see the Labor Bureau statistics are releasing their numbers tomorrow, so that will be the all-important one right there. So let's also take a look here at the ISM non-manufacturing. So this is basically ISM services. This is basically the service side of the industry here. And we had back in October about 52%. They estimated December would jump up to 53.3%, and it did go up, but not quite as high as expectations. So so right there, but again, better than going backwards. So let's go ahead and jump over to the headline news. And basically, stock market's a little mixed today. Basically, we got the Dow and I believe it's Nasdaq are down, but the S&P's up. So it kind of depends on which indexes you're kind of looking at. And why is that? With some of the decent news we got on the headline news, what do you think? Europe concerns now over Eurobank's capital, that they have enough capital sustain the weather this storm, so to speak. So let's go ahead and take a look, see how this is playing a part in the interest rates, and see where the bond market is. As you can see, we touched the ceiling yesterday and went down. That's what the red stands for. We even touched the bottom. So we had a pretty volatile day yesterday and pulled back a little bit. So about midway there. So we kind of started out the day about where we left off, and kind of even pretty much came close to hitting the ceiling today, testing, seeing it pulled back a little bit. We could be trading mid-range and maybe waiting for tomorrow with the job news coming out tomorrow. But again, the main variable right now has been Europe, so that could obviously play the wrench into it. So, or where the moods are for investors. But right now, the rates lie basically, depending if the lenders did a price for the worst yesterday. If they raised the rates yesterday, they're probably going to be about the same today. If they did not, they'll probably price it in today's rate sheet, and the rates would be a little bit worse than yesterday. So basically, here's how it goes. Rates will be basically about the same as where we left off yesterday, where the bond market is, or it could be worse than what we had in the morning yesterday. So hopefully that clarifies a little bit, gives you a gauge as to where things are at. You guys have a wonderful day. If you guys are on the site from mikesdailymarket.com or on the YouTube, please subscribe, get your free updates sent to you daily. Have a great day, and see you tomorrow.